Hey guys, so welcome to another webinar session. If you've never been here before, welcome. This is for educational use only, right? I'm practically showing you guys, I'm showcasing this tool right here that I believe is cool and the way that I've been approaching the market for years now, and it's been working beautifully. So without much explanation, I just like to dive way into this. So these tools that I'm using today, there's three tools I'm going to be using, which is COT, seasonality, and then we have probability. COT is basically Commitment of Traders Report, and basically it's a report that it's released once every week around Tuesday for the public to view into what people are doing in the market, specifically the people that have huge amount of capital and organizations all around the world that they have to tender what they are trading to the United States government. And we use that primarily because we use it to see into what these guys are doing and then align ourselves accordingly, because they're called smart money, and smart money tends to have a lot of money and they don't want to lose their money or their fortune. So they use it in a kind of a very adaptable and dynamic sense. And most of them do not look to make money off the market. They make money from their normal transaction, which is if they wanted to buy something, for example, in Canada, for example, they will need Canadian dollars and they need to transact that money from whatever base currency they have it in. Let's say if they had it in pounds, they had to change that to Canadian dollar to get the best price for whatever they want to buy. And some of these guys buy the stuff in the future. So if for example, they need some 2 months from now, they tend to get information and they would secure their money right now. So if the for example's sake, let's say the Canadian dollar is one Canadian dollar to one Great British pounds. So, and they're thinking in the future, they one British pounds will now be worth less for in Canadian dollars. So what they tend to do is they try to secure the best price for themselves now. So in the future, when they're like, okay, you know what, we deposited £1 million or £1 billion in your account to receive 1 billion Canadian dollar at this given date. If that date comes, they receive that money. And if that date comes, if pounds is actually worth less, they still get the exact amount. But if pounds is worth more, they still get the exact amount. So either ways, they're just trying to secure a position for themselves at a specific price. And the main reason we follow these guys is because these guys know what they're doing. Record has shown over time, history has shown over time that they seem to get it right more than speculators in the market, people like you and I, and the rest of the world. And seasonality, for example, is just based on seasons. We have 4 quarters of the year: Q1, Q2, Q3, Q4. And from all those 4 quarters, what tend to happen is the market move in different ranges on each quarter. So what we try to do with seasonality is, if we see the commercials or the people, the smart money moving in a specific direction, and it matches the season, the pattern within that specific season, then the probability of that trade coming in is very high. And then, which then leads us to the last tool, probability, which then gives us an exact date we should go into the market. You will see all three tools in a moment. So let's dive in. I've already highlighted some of the asset I'm going to be looking into. So I've seen, CHF is looking like a good position. And this is where the smart money is, commercials. And what we look at is basically the changes, right? We just want to see if they're adding more position, or they're adding more position to the long or short. Long means buy, short means sell. If they're adding more position to the long, or they're adding more position to the shorts. So in this instant, for example, we have Swiss franc, CHF, we have that at long, right? We have them going long because they're adding more position to the long side. Next thing is we have JPY. They've added to the short side, but it's very small compared to the long. So we have that going also at long, JPY. Right. Then the next thing is Euro. We have that also on long, right? It's good because they're actually taking a lot of position away from their short side. It is not big. It's about 1% of their position, of their overall position, but it's still something. So taking that out. So now that we have those three, we're practically almost done with our strategy. The next thing is to look for seasonality, and the next thing to look for probability. So in less than a minute, we already have 3 trades that we can possibly look into. Now, you might be thinking, oh, it's not in pairs, it's just one. There's a reason for that, and you'll see that in the next phase. So the first thing we're looking at is CHF. Now, if you know the direction that one asset is going to go, right? If you're trading, let's say Euro CHF, for example, and I know that CHF is going to go long, right? So that means most likely Euro CHF will most likely drop, right? It's only logical. If CHF goes long, which CHF becomes more powerful, then Euro should get weaker, right, against the CHF. So that's why we use them individually. You know, we don't try to look at them together as a whole. There's so much noise there. There's too much going on from the left and the right. We might just look at one, see if one is going to get strong, and then we pitch that one against the other one. So now we are on the 11th of 06. So we're somewhere around here. Now, the way I use the seasonality is basically I look for, you know, long-term moves. So I look for mainly moves like this. You know, it looks like long-term. This one, it's quite not aligned, but maybe somewhere around here for the short, and then here for the long, here for the short. You know, I only go in on the trade if all three are in alignment with each other. The 5 years, 15, and the 45 years. And basically that's the average price movement in the last 5 years and the last 15 years and the last 45 years. So, and I try to look for when they align. If they don't align, I do not touch that trade. Or if they misalign with my CLT report, I will not touch that trade. So since we're looking at CHF, I'm looking for long, and currently right now we are on the 11th right here. So we're expecting CHF to start going long. And from the COT, from the seasonality, what we can see is around this period anyway, from 10th, like yesterday, CHF normally should start its up move. But, but we're going to have a pullback maybe today. But because market isn't open today, so it's not a big deal. But on Tuesday, look at this. On the 13th, we have that long coming in up until here before market starts consolidating. So we have on the 13th all the way to the 17th for our long trade. You see, CHF aligns with the COT report, right? So we go 13th till 17th, right? So we have CHF going long 13th to the 17th. Boom. That's all we need from this trade. We don't need much. We go to the next one, JPY. Now, keep in mind, if all three does not align, for example, and if you just align for maybe just 1 or 2 days, I wouldn't take the trade. I need excess of 3-4 days alignment, you know, to take that trade, because shorter term doesn't really guarantee good results. I've looked over time that long term actually guarantees more results than short term. So next thing is JPY, right? We're also looking for JPY to go long, and we're currently around here. So from the image right here, we can see the 44 years and the 15 years stays long, but the 5 years kind of looks like it's going to go short. Now, even though this trade most likely might happen from the 13 to 17, just like CHF, I will not take this trade because of 5 years is not fully in alignment with it. So for that reason, I would delete JPY out of the equation. So that means all factors that I have with, you know, JPY, it's literally not going to be able to, you know, I'm not going to be able to run it. So the next one would be Euro. Will be Euro. So I'm going to give it Euro a check right now and see if Euro is aligned with what we have on the COT report. And it's quite hot in the UK at the moment. It's like literally boiling. I'm just gonna put down. Apologies, you might hear a fan in the background. It's because it's hot right now. So let's see. Right. So we are currently around this period right here, right? So oops. So we're somewhere around here. And it looks all messy and all of that, but it'll be so 11th, we're here. So we can actually go from the, even though the 5 years doesn't really align with it right here, it's a risky trade. It's more on the high risk side because the 5 years looks like it's pushing down, but it's still going to go up. So we can go in from, let's say, around tomorrow all the way till the 17th, right? For a long. So go Euro from 12th to 17th. Now, you can see in this instant, we have CHF, we have Euro, both of them pointing long. And now you might think, okay, maybe I want to trade Euro CHF. Which one am I going to trade? In instance, when both of them are going long, just don't touch both of them against, don't pair them against each other. Just leave them alone, because you're going to have a massive tug of war. One or the other might win, and you don't know, you know. So for that reason, I don't even touch that. I just let it, you know, just let it, I'll pair with every other pair available to me, but not with themselves. So that being said, the first thing I'm going to do is I'm going to just do CHF right here since I've checked CHF. Now you can see the pairs now. You see on the probability tools, it gives you that instant of the pairs. Now remember, we're not doing Euro CHF, so skip that. And I'm just literally just pulling out all the CHF pairs I can find for the alignment of the date that I want. Now, probability, you might have never seen this before. People that have been with me for 4 years, 3 years now might have seen this, you know. People that, if this is your first time viewing this, you probably haven't seen this before. And basically, I have this covering through the entire year. That's an inbuilt tool from, you know, from our side. We actually built this, spent a lot of hours building this. And when I'm saying hours, I'm not like talking about 10, 20 hours. I'm talking about days. In some cases, you want to add up to weeks or maybe months trying to get all of this together. Most likely months trying to get this together. Basically, what it does is it shows us the percentage of win on a specific date. So, for example, let's say May the 1st, I have a 53% chance. If I just go into the market, I don't do any analysis and I just buy, right? And I have a 58%. I can literally decide to use this tool and look for the days that have the highest win percentages, maybe like a 60%, and just focus on those days. Well, there's no point. I don't really want to just, that's kind of like me gambling my way because 60% win means that I have a 40% chance of losing. But if I combine this with the COT report and seasonality, my chances of win is now increased. So I'm looking at in situations where I have 63% now, for example, I might now be looking at 83% or 93% win chance because of I know the COT, the smart money is aligned in my favor in that specific direction. And also seasonality is showing me that at that particular time in the year for the past 5, 15, and 47 years or 40 years or 30-something years, it normally moves that direction. So that's how we use this tool. So in reality, when we look at this probability now, what we're looking at now is CHF JPY, and we're going to look at that for June, yeah. So let me see. So since today is 11th, we're looking at June for CHF JPY. We're looking for that to go long. Now, when do we want to go long? We want to go long from the 13th, right? And we can see that right here, 13th, all the way to the 16th. That's long. So what we do now is go CHF JPY long 13th, just as expected, till 16th. You know, 16th, so a day earlier. So it all looks long. And now I only take trades that have 3 days in my favor. 1, 2, 3, like over 50% in my favor. Not 50%, but 51 and above percent in my favor towards the direction that I want to go. And the main reason I do this is because of when I have trades that in my favor for 3 days, even if it flops on the first day, the second day, chances of flopping is lower. And if it does on the second day, then most likely the third day, you're going to recoup everything you've actually put in there. If it doesn't at that third day, then just close the trade, slam out. If you have a stop loss with the ATR ratio, which I've shown, you know, some of my previous members about, and a lot of people that attend the line of webinar know about the ATR tool, they will know that if you set your ATR times 2 or maybe a 4-hour time frame or a daily time frame, within these 3 days, you might most likely never get your SL hit. And if your SL is not hit within those 3 days, most likely by day 4, you already got your money back. So that's how I kind of look at it. You got your money back with some profit into it. In a case that, you know, the trade goes against you. If the trade goes in your favor, you know, you just be raking out money from all these days all the way here. But one thing is, you're never going to win all your trades. You're going to make some mistakes on some. You're going to lose some. You know, your entry might not be perfect on some and all of that. But with these tools, it puts you in a better position of attacking the market. And you can tell we've only been analyzing the market for like around 10 minutes or so. So it's not really that long. You know, we haven't really spent much time doing this. You can do this every day for 10, 20 minutes and you're done for the day. You can be done for the entire week trading just by looking at these stuff, right? And I haven't even opened the chart for once throughout this entire time. So that's one trade right there. We have CHF JPY. We can look at USD JPY, for example. Let's see. So USD JPY, we have, what date is this? It's 11th, 06. Yeah, so we have it going from the 13th all the way to the 15th. So we can use USD. So USD CHF actually, in this case, is going long, but because we're expecting CHF to get stronger, it should be going short. So for that reason, USD CHF, we won't trade that. And we'll go to the next one, which is, yeah, CAD CHF, same instance. So if CHF is going strong, CAD should be going weak. So From what I can see here, it doesn't look like that. You know, C80 goes weak from 13, but bounce back, then goes weak for 2 days. I like mine to be 3 days straight. It should be weak for 3 days straight. Since it's not, so I move to the next one. So you can see by just looking at the percentage, we're eliminating trades that we don't even need to be into. Only trades that we need to be in, that's what we'll do. So same issues right here with JBPCHF. So we'll take that out as well. We don't need that. Check AEDCHF. AEDCHF, right, the same thing. So we don't need that. And if you don't understand what I'm looking at, I'm just looking at a percentage. I'm looking for percentage 3 days in my favor. Right. So in regards to NZDCHF, I'm looking for it to go short for 3 days, right? From the 12th and 13th. So from the 13th, NZD is actually getting stronger. So for that reason, for this CHF long trade, we get only one trade, which is CHF JPY. Right. That's the only trade we get for this. So that's the trade we have on that one. And then we can do the same thing for euro. All I just need to do is just so euro right here, and then it's going to highlight all the euros. I can open them up and check the percentage of win. So for the guys that have the membership, I'm you know, I've already done this work, heavy lifting for you. You can just go check the euro and get the, you know, probability, and then use that to trade your assets. For the guys that would like to know more about this, all you need to do is go to the website business.dameempire.co.uk and /pricing. We have, I think, 6 different membership types on the website for you that you can literally go into. Get the professional if you want to have access to all 3 tools, but it's listed right there. You can get it, and the link is also in the description of this video. So thank you very much for spending the time to watch this video, and like, comment, subscribe, and leave any comments you have. I will be sure to give you an answer to it. Thank you, and have a lovely trading week ahead. Take care.